Let's talk about when not to sell options. These are my three risk management rules. And my name is Eli. I'm a professional options trader. I trade with over $8.8 million and I've been around for quite a bit of time. So these things are definitely important to understand. Let's get on with the video. So rule number one is never sell options ahead of big reports and events. Now, usually nothing happens when you do, but those outlier events, they are the one that will really eat you up. And you can always open a position right after a big event or a report comes out if nothing really happened. So there tends to be a lot of price volatility right after major reports and big events, which is not optimal for option sellers and can put positions at risk. Most major reports and events cause little to no volatility, like we just said. However, some can cause extreme volatility, and this is where most option sellers experience large account drawdowns. So it happens, really happens all the time. Everything can be fine for the entire year. Then just one major event or one major, let's say, report comes out and just wipes 30-40% of someone's account. It happens, it usually happens at least once a year, sometimes even more on average, right? So the major known reports and events for each product are for gold and silver is basically Fed rate cut decisions, meetings, inflation data, tariff announcements, meeting between world leaders, major economical announcements as well. For copper, it's tariff deadlines. It's usually China related because China is is the single biggest purchaser of copper in the world. So we have the China PMI reports, and again, the Fed rate cuts also affect the price of metals, which copper is a super industrial metal. We have crude oil, we have the OPEC monthly meetings, Fed rate cuts, meetings, tariff deadlines, meeting between world leaders, and major economical events. When we have the grains, we have wheat and soybean. So we have the monthly world agriculture supply and demand exports report. We have also the quarterly USDA report and tariff deadlines. And it's really not that complicated. Really, I listed probably almost all of the possible reports that you can think of. But obviously you need to be on the look to see, because sometimes some reports are more important than others. But generally speaking, I tend to not have any positions during those reports. Or for example, April 2nd, I made sure I closed all my positions because this is a known potential event that can cause a lot of volatility, which this is exactly what happened, and a lot of people lost a lot of money for absolutely no good reason or no good reason for them to stay in any position, because nobody knows what's going to happen on April 2nd, ahead of April 2nd, right? So no point in kind of risking your capital. It's a pretty big thing. So let me show you where I can find some reports for each and every product, and we'll move on. We're looking at the investing.com, and I want to go over and look at the economic calendar here. And this is where you can find everything for basically gold, silver, and even possibly for copper, because we can look at also at the Chinese reports here. And just so you know, you don't really have to know kind of everything and check everything. I use like any kind of AI chatbot and just simply ask, hey, are there any upcoming big reports or big news that can affect the price of gold futures, for example, or copper futures? It usually does a pretty good job kind of listing everything it can find on the web, and then from there you can obviously go and check yourself. So if you're worried about missing something, you can always use just an AI chatbot, which is what I do every single time, outside of just kind of looking at these reports. So the way you would set it up, you go to filters, we'll clear everything. So we'll choose, where is it? China is right over here. And we'll choose the United States, and we'll just go for the 3 stars importance. So the news, then you can just see, there's initial jobless claims. Tomorrow we have crude oil inventories. We have the Fed's meeting. Next week, we have the manufacturing PMI, which is a big one for copper, because again, China is one of the biggest copper consumers in the world. So manufacturing and copper goes hand in hand, or the manufacturing report. it's really that simple. It's not too crazy. And again, I would highly recommend using an AI chatbot just to kind of get an idea of things that you maybe not have thought about, and it usually just works amazingly well. Next thing we have is crude oil. We have the OPEC and OPEC plus meetings. If you're not sure when they are, you just Google it. It's really simple. Usually at the beginning of every month, I will just kind of go and research and see exactly when we have a meeting or what's going on. You see, we have November 30th, blah blah blah, November 15th, and from there I will just gonna just create a calendar just so I know exactly when there's what kind of report comes out for what commodity, what product, and it's really that simple. And last but not least, we have the grains, which is the USDA schedule release dates for agency reports and summaries. You can just copy it, put it in Google, and you'll get to this page where you need to choose a start and an end date. I just put at the end of the year and then today's date. And you can see there's a lot of reports. Now, a lot of them, you don't need them, obviously. The weekly export sales are usually not a big deal. But sometimes they are, it depends. A big one is this one. This is the monthly, the WASDE supply and demand estimates report. So this is the monthly one that I just talked about in the previous slide. So this one, it's 12 p.m. Tuesday on December the 9th. So you want to just keep in mind on it and, maybe look at some other things. And if you're not sure exactly which report is important to your product, again, just ask an AI chatbot or just ask in this video in the comment section. It's really simple. And then kind of go from there step by step, just so you don't land on some massive report that really just flips your position upside down. This is it for the reports. I think it's pretty self-explanatory and it's really simpler than you think. It doesn't have to be that scary. And again, use an AI chatbot. It's just super helpful and will clear everything up for you. And obviously, I would recommend doing your research on top of it as well before opening a position or going into a certain report if your position has been already opened. So let's continue on. Rule number 2 is never sell options when CVOL is low, and CVOL is the commodity volatility index. And in simple terms, CVOL shows us if volatility is relatively high or low, or if option prices are relatively high or low. So the CVOL is basically the Bible for option sellers, specifically if you sell options on commodities, on futures and commodities, because as option sellers, we always have an added edge if option prices are relatively high, right? We want to sell when volatility is high, when options are overpriced, and this can clearly tell us if it is or not relatively. Obviously, we receive more premium and can profit when CVOL goes down while in a position, which is a huge benefit. And a lot of my trades are most of the profit comes because of CVOL contracting during the trade. A common theme is to ignore CVOL. A lot of people just completely, ignore CVOL. They enter positions left, right, and center. Option sellers end up opening positions when CVOL is low and experience big losses when CVOL goes up while in a position. So basically, when there's volatility in the market, when the price moves a lot, as a result, CVOL will go up, volatility will go up, and your position will be losing usually a lot of money because you sold when volatility was cheap, and now you're in a position where volatility is expensive, and option prices are maybe relatively overpriced, and you're having a tough time. And this is a simple free edge upgrade. If used properly, it is a game changer, right? So I don't even consider a position unless the CVOL is relatively high, and I'll show you exactly what I mean by relatively high. So let's take a look. Let's look at what is a relatively high or low CVOL, or the commodity volatility index, and you can just Google CME CVOL and you'll find the website. You'll also have to sign up. It's completely free, but then you have access to it, right? And then you have all the products over here. So I'm just gonna go over all the ones that I'm personally trading. So gold will be the first one. Usually I would mark off the underlying. If it doesn't look like this for you, what you can do is you will go over here, choose 1 year, and then you can choose 3 months. So I'm usually looking at the 3-month volatility. So you can see relatively it's at the upper 60 percentile. If this is the highest point, this is the lowest point. We are relatively high. So this is pretty good volatility, very clear to your eye, and it should be pretty obvious for you. So next one is we have silver. Silver is pretty much almost the same thing. It's still relatively high, even though it's closer to the middle here. It's still, I would consider it relatively high volatility. For copper, it's going down right now. If this is the highest point, this is the lowest point. This is really on the verge of being good or not good. So, if this is something I'm not sure, then I would just call it not a good volatility. If volatility would have been at the 30 level, give or take, it would have been a pretty good volatility relatively, right? And then I would try and sell some options or look if there's any positions. Crude oil, if you look at 3 months, clearly we are on the lower end. This is pretty low volatility. So you would not consider selling any options here because it's just not gonna worth it. Now we have natural gas, which is clearly a really high volatility. You cannot really mistake there. Let's look at soybean, which is also a really, really high volatility. The price has been moving up and up, and volatility has been moving up with it. Then we have wheat, which if you look at the 3 months, again, it's a pretty high volatility. It's closer to the top of the volatility chain over here, or volatility levels. So let's try and find maybe something that is not so clear. And this is obviously also pretty clear, very high volatility. This is a pretty high volatility environment. So hopefully we can find something that is not as clear. See, most things are really clear. This is low volatility. It's really hard to find something that is possibly not that clear. This is also pretty clear. So if you have any questions again, or any specific requests about a specific CVOL volatility for a product, and you're not sure if it's high or low, just let me know. So this will be considered low volatility. Again, it's at the lower half. So I would consider a high volatility if the volatility is at the upper 60 percentile of the range. So this is the bottom of the range, this is the top of the range, and anything in between is basically just where volatility has been bouncing around. So hopefully it was pretty clear. This is a rule of thumb that I would never, ever, ever break. Every time I break it, or every time I used to break it years and years ago, I used to work with IVR actually, because this is a pretty new tool. But every time I would not open a position with a high volatility or relatively high volatility, I would end up paying for it at some point. So thank you again. Let's continue on. Rule number 3 is never sell against the trend. This is also a pretty big one. I think a pretty simple one, and it comes down to probabilities. Going against the trend as an option seller is as bad as trying to time the bottom of the market. It takes a big force to reverse the trend, and the probability of timing a trend reversal is extremely, extremely small. There is a much higher probability the trend will continue or price will just slow down and kind of go sideways. Right? I think this is nothing new, but a lot of people don't follow it, and they try to guess when a trend will end, and it's just such a low probability play. Sometimes it works, obviously, for some people with options. You might make it work a little bit better because you can sell options way out of the money. But I just don't play this game, right? With the amount of capital I'm working with, this is absolutely not something, not a high probability play to kind of go for. There are much better positions to open that can yield the same amount of profit with way less risk and way higher probability that it will actually work out. So I think it was pretty easy, pretty self-explanatory, at least for this rule. Overall, hopefully you took something out of this video. I know some things are somewhat intuitive, but I think rule number 1, rule number 2 are absolutely the biggest things that will change your trading. Yes, you might not be trading as much as you used to, and it's kind of like a disease. People just like to trade all the time. I don't think it's right. For me, it doesn't work this way. I trade very little and very focused on where I clearly have good opportunities. And hey, some years there are a lot of good opportunities, right? So you end up trading a lot. Some years it's less, right? So it just depends. 2025, if you're watching it after 2025, or if you're watching it within this year, 2025, this year has been pretty crazy, right? Ups and downs, a lot of uncertainty, Trump, tariffs, China, whatnot, right? So this is a year where clearly you won't have as many like clear good opportunities, high probability opportunities, but you will still have some and you'll be able to easily beat the market. Right now, as we're making the video, the market is up, I think, 13%. The S&P, and I'm up 24%, right? So with basically none of the volatility of the market. So it's just, it just kind of comes down to if you want to really take trading seriously, especially option trading on futures, on commodities, you really, really have to understand where the odds are clearly in your favor and when they are not, and trade based on that, and just be really patient, and it's all going to work out. Thank you again. If you have any questions, let me know. If you're interested in my mentorship program, let me know. There's no upfront cost for it. It's a performance-based only program. Thank you again, and I will catch you in the next one.